going to have a great panel today with an incredible group of panellists. Just to set the scene for what we're looking at, I don't know any of those who were in the Admiral Barry presentation earlier, but incredibly frightening, dystopian almost statistics about kind of what's likely to happen in terms of the worst case scenarios for climate change. Nick Austin from Water Trust sort of talked about the huge potential for crop loss and agricultural output reduction that might take place. So obviously there's an urgency on the production side to get things right from that perspective, but turn it around, you look at the other end and the influence and the pressure you are seeing from the global financial community. The final framework for TNFD has been declared with mandatory reporting from next year for companies, for those large companies with $1 billion turnover or more. And it's not far away that you're going to see sort of pretty reasonable enterprises by 2027 who have gross assets over $25 million having to report on their Scope 3 emissions as well. Now, on Auctions Plus, we've got a fair few farmers I think you might fit into that category of having property of that size and pretty big turnover too. The finance industry itself, there's $30 trillion of assets under the Responsible Investment Association saying we want to see change on this happen, and they're putting pressure on banks, on insurers who are now requiring people to report their emissions up into them. We heard McDonald's a bit earlier with their pilot project taking place. Coles said it expects 75% of its suppliers to have emission reduction targets by 2027. And this week, ahead of COP, 131 companies representing $1 trillion in global revenue, Nestle, Unilever, Bayer, and Heineken amongst those ones, put out a letter calling for the phase out of fossil fuels, saying our businesses are feeling the impacts and cost of increasing extreme weather events resulting from climate change. So our panellists here will try and help us steer through what that means for Australian ag and how ag can kind of be on the forefront in Australia for sustainability. So Lachlan, Baird from Prime Super, I'll start with you because we talked about that huge finance pressure. Just give us sort of a scene setter from your perspective of what we're looking at.
So within the superannuation world, there's a massive challenge and challenges that we're facing on how we invest our money, where we put it, how we measure it, and the returns we're going to get from it. There's a lot of pressure around disclosures. Just as a small example, we've got ASIC that's very, very focused on what you disclose. So there's always been an issue around greenwashing. What do we need to do to make sure that we're talking the right language and not overstating what we're disclosing? But also, they're also talking about green hushing, so you can't not talk about it. So it's this interesting dynamic between the two, and there's a financial risk and penalty to ask if we overstate or understate. So we are very, very reliant on underneath the reporting that flows up. And then also it's for us from an investment point of view, how do we put the money in the right place to make a significant impact on the transition, but then also on the final stages, whilst also getting an investment return. And that's the other challenge we have as an industry. We're currently $3 trillion, we're going to grow to $9 trillion. This money's got to be outperforming. The expectation from the industry and everybody that's in a super fund is that we outperform. And that's a very large amount of money, always outperforming. So it's this evolution of the industry and how we continue to do this both domestically and offshore, and how we invest in the right way in Australia without too much capital flowing offshore.
Nick, let's get the point of view from the government. Talk about the pressures that are coming at you and how you have to respond.
Yeah, so from the Department of Ag's perspective, sustainability is increasingly embedded in everything we do. It's from our farm resilience sort of work, drought policy work, agricultural workforce and labour work, trade and market access in particular. It's becoming increasingly dominant, and the work sort of closer to my space around sort of soils and natural capital, and sort of NRM work with sort of the regions and things like that. And also the emerging work in the climate sort of net zero space as well, which is a big area of attention across government, and it's something the industry has been working very hard on for a long time through sort of R&D investment and so forth. And I think we're going to see sort of a step change in some of that sort of priority work too, given the net zero task facing the whole of economy, of which the food and fibre supply chain is critical for lots of reasons.
Yep. Helen, from your perspective, representing the community of Indi, or the seat of Indi, and as an independent in Parliament, what's it look like both from your community perspective and what you are hearing on the floor?
Yeah, so certainly from the community perspective, what I heard coming into the last election, which was just last year actually, 2022, not that long ago, was farming community knowing that there was significant change happening right around them, to them and with them, that the question about farm income diversifying through things like carbon credits, through nature resource funds, that there was a strong desire to have a greater understanding of that. There was significant confusion amongst many everyday people out there doing their traditional farming enterprises, and a real desire to be involved, but to be involved in a way that made sense. And it was from conversations that I had on the ground with farmer groups in Indi that I took to the last election, and then through to the Ag Minister Murray Watt when he was appointed, this idea of translating the science into practice around re-establishing something like an Ag Extension Officer that was focused on sustainability, on things like carbon credits, climate change more broadly, and I was very pleased. The government listened to that. We got a $40.7 million investment in the last budget around establishing sustainable agriculture facilitators, and they'll be rolled out across 52 regions in Australia. That's all forthcoming. So again, listening to the community very carefully about seeking assistance in navigating this space, and then taking that to government in a solution-focused way, really.
And in Parliament, we've obviously seen the rise of the Teals, for instance, and there's been a huge change in terms of those super safe seats that belong to the Liberal Party, I suppose. Has that changed the momentum inside Parliament for faster action, and what does that look like?
Well, there's no question that the expanded crossbench, the biggest crossbench since Federation, has changed the tenor and the tone and some of the subject material of debate in the Parliament, without question. I think what we see with an expanded crossbench is a willingness to work with government, whoever that government might be, and to try to bring forward improvements to policy, to try to seek amendments, to try to challenge government to do better, irrespective of what that legislation might be. And certainly from my perspective, when we debated the safeguard mechanism earlier this year, and carbon credit units, ACCUs, were a key component of that. It was for me then to go to the government and say, it's not just about farmers selling carbon credits, it's also about understanding insets as well as offsets, and we need to take account of those things, and farmers really need to be right at the forefront of this and understanding and driving this policy. So again, I was able to make some amendments to that policy, similarly to the Climate Act, to put rural and regional Australia into the legislation. And again, I think similarly my colleagues on the crossbench endeavour to do that with their community front of mind and with the nation alongside that. So we're there to represent our communities as best we can, to listen and bring forward not just come and describe a problem, but to try to put forward some solutions, some policy-based solutions that are meaningful from our community's perspective.
It'd be good to get the view of the humble farmer on the panel as well, Alasdair. So from your perspective, I mean, the sustainability imperative, is it now at the point that's too big to ignore for the farming sector?
Look, I think, as everyone's heard over the last couple of days, this is a big topic of conversation. And it's become a big topic of conversation, I think, for 2 or 3 really important reasons. The first reason is I don't know of any farmer now that isn't directly affected by climate change. Our farms came out of drought about 3 years ago, February 2020. We've had 3 really, really wet years since then. We're about to go into drought again. So this climate variability, which seems to be becoming more extreme, is just something that we're going to have to constantly deal with, and thinking about how we build resiliency into our business is going to become front of mind. So that's one reason. The other reason is that there's pressures on our commodity supply chains from all directions to demonstrate sustainable features. I mean, we're getting pressures from supply chains, we're getting pressures from capital markets, we're getting pressures from trade negotiators that all want to be able to say that the commodities that we're producing are being produced in a sustainable way. So that's not going to stop, and we really need to think about how we organize our industry in a way that we can demonstrate the sustainability of the products that we're producing. And I think the next time, Fiona and Murray Watt did a great job earlier on this year in Europe talking up the sustainability of Australian products. We need some hard data to back that up. So that's going to become really important. Having said all that, I think there are some great opportunities for the ag sector here. There are going to be some great opportunities to create premium product lines. There are going to be some great opportunities to get concessional finance for people that are doing the right things. There's going to be some great opportunities from ecosystem service marketplaces. So this is not all doom and gloom. I think if we get this right, there are opportunities. And I was particularly interested to hear yesterday the Ag Minister talk about developing an ag and land use sector for net zero, because I think that's going to be really, really important. And it's going to be really, really important for us as participants in the ag sector to demonstrate the part that we can play in helping to deliver net zero.
Nick, from the point of view of what the work you're working on, that opportunity in terms of low emission or lower emissions or scope 3 reported emissions, agricultural products coming out of Australia, how long is that journey? What's the opportunity that you see in terms from the government's kind of modelling and perspective, and how do your sectoral plans for emissions reductions kind of play into that?
Yeah, so where the journey is already started, and Australia, as Alasdair has indicated, I think is pretty well positioned compared to a lot of our competitors in terms of both our sustainability credentials and our emissions credentials as well. For ABARES has done work recently and sort of highlighted a lot of our sort of key export commodities. We're sort of ahead of the pack often in terms of emissions intensity. So that's a good starting point, but we obviously can't stand still, and going to have to make sure that we stay ahead of the pack, and in a very global competitive environment that takes hard work. We definitely can't stand still. And with respect to the sector plans, so there is the Ag and Land Sector Plan is one of 6 sector plans being developed across the economy, and they sort of come together to sort of really sort of map out sort of how we get from where we are now across the whole economy to sort of a net zero 2050 environment. And this again presents, I think, quite an important opportunity for the agriculture and land sector. I think there's definitely an opportunity to position Australian agriculture as a world-leading climate-smart exporter of food and fibre to the world. It sort of ticks a lot of boxes in terms of Australia's role in regional food security. It ticks a lot of boxes in terms of really demonstrating to the world the strong credentials we have in this space, and backing them up, as Alasdair said, backing them up with evidence and data too is going to be really important. But many commentators have said that the whole world sort of transition to net zero is going to sort of provide or sort of kickstart a really significant reshaping of the global economy, and the Australian economy will be part of that. And it's really important that the food and fibre sector really grasps this opportunity and uses it to its advantage.
Yep. Helen, you mentioned some of the work that you had done to get kind of support in terms of extension officers into some of the recent bills. But do you see a situation where it's there's enough carrot, or it's more of a stick situation? I saw a question that came through on Slido a second ago, sort of talking about the conversation and what can you do, for instance, to help the conversation along in a constructive way to try and get farmers on board with this, whether it's the opportunity or whether it's to avoid the stick that they might have in terms of regulatory change?
Yeah, well, farmers are smart business operators, so I think that this is not about a stick for agriculture. This is around enabling agriculture to embrace the opportunities that are there, and that there's a role for government in enabling that. And you know, that one example I got, which I was really pleased to work with NFF on, around that translation of science into practice, is one example of that. But more broadly, farmers come to me and tell me quite candidly that they know that to engage in a global market, that they will need to be demonstrating their credentials in carbon neutrality. They want to work with government in working out how to do that. Now that's good for everyone ultimately. There's real opportunities for diversification in income, certainly, but more broadly we know from the science that when we have sustainable agricultural processes, and farmers have known this for generations. My dear old dad knew this, 50 years ago, as a young farmer then, that if you have better soil health, if you maximise your crop rotations, if you have good animal breeding, you get higher productivity. And I think that's the key here. And anything that government can do, whether it be through research and extension, whether it be through good diplomacy into markets, and right now we have an EU deal being negotiated, most probably this weekend. That's what will assist Australian agriculture, and we have the challenge before us. I mean, 2030 is coming up at us like a very fast train, if only we had one of those, but it's coming at us right away. So I think this is absolutely about agriculture working with government, not working against government, and likewise government working with farmers, not against farmers. This is something, we're on this train together.
Lachlan, from your perspective, we talked about the supply chain pressure. So from a superannuation fund, I've got friends who work in this saying that there's an enormous job to do to start to be able to report on those Scope 3 emissions. Do you see this sort of wave of change that's going to happen once the reporting standards come through mid-year next year, or do you see this will slowly kind of come through where that really intense pressure on the supply chain is going to happen because organisations like yours will really start to grill them on their emissions, for instance?
It's going to be a massive change. It's going to come very quickly. The risks we have is if we can't get the information together quickly enough and meet our reporting obligations, then we're actually in breach of the law. So then you're forced into a position of divesting companies that aren't giving you the information you need. The other side of it too, I mentioned before about the role of regulators. If there's incorrect information coming in, how do we confirm that number is right? So does that mean we need to go out and actually conduct audits of all the companies we're investing in? And just that regulatory and compliance burden on us, but then also right down the supply chain, becomes extraordinary, and the cost there is just silly. So obviously we can't go that far, but how do we manage it so we get comfort over what's there? And then the bit that, to me, I think is very interesting and needs a lot more thought is, well, what does the consumer actually do with it? What does it actually mean? Does that change their behaviours, or does it push people to doing things that in the long run potentially aren't the right approaches to be having? So it's that concern for me that we jump on the next fast train as opposed to what's the right solution for the longer term.
And as your investment team goes around and has conversations with, large, multinationals or domestic kind of, sellers of food, what are they telling you in terms of their worries about having this done in time?
It is a real issue. There's a lot of concerns about how do they get the information together? How is it calculated correctly? Is it right? Is it reportable? We've got another concept in our industry now where we need to be aware of fourth parties, so not just the people we're dealing with, the companies we're dealing with, but the companies they're dealing with. So how do we understand what's coming up that supply chain? And harnessing that all up into our financial statements or our annual reports or our general disclosures is a big risk for us.
Just trying to pick that question up. Will the sustainable agriculture facilitators be scaled up, scaled down to meet demand? Do we have a sense that there's going to be enough people out there, Nick, to start to get into the field, to get the data in front of people, to start to record it, to then send it back up the supply chain?
Yeah, I mean that's a big question, and it's not going to fall on any individual shoulders to carry. To be honest, I mean the sustainable ag facilitators that Helen mentioned are an important initiative and provide that kind of network across the 52 regions as a starting point. But I think let's also not expect 52 sustainable ag facilitators to fix everything for the whole system and the whole supply chain and all the demands on that. So there's going to be sort of, I think, multiple sort of avenues to sort of tackle this, and it's not going to be done at once. It's going to take time, and that sort of more phased approach is going to be really important. And I think also some of the questions there around, ultimately what is sustainability? Like we could have a very long philosophical discussion this afternoon on what that is, and we've been talking about sustainability for decades and decades, and what we meant, a decade or two ago is very different to what we mean today, I think, given, everyone's mentioned sort of the expectation now around credentials and backing up claims around sustainability, and that is very much a key task that both government and industry is going to have to sort of focus on. And there's some really good work, including that the NFF is leading through the Australian Ag Sustainability Framework to really start to credentialise what we mean and talk about with respect to sustainability. And then we need to project that to sort of our trading partners as well, to make sure that some of the prescriptive approach has been taken by other countries, such as in the Northern Hemisphere, don't dictate kind of what sustainability is, and it's not a one-size-fits-all approach. So that's probably part of the task at hand too.
Right, so we're taking this interesting term, sustainability, which is a bit of a catch-all and a bit woolly, let's say. Well, we've got another term that's now emerging more and more often, which is natural capital. Alasdair, you've been doing a lot of work with this through MacDoc Foundation. Spell it out in layman's terms. Obviously, you've done this project with NFF as well, but and how natural capital works, how the reporting can go, and how quickly you can get that reporting in place, and what kind of opportunity is there once we start kind of stapling natural capital accounting to the land?
Gosh, that's a lot of big questions for Friday afternoon.
We can carry on with the beers later on.
So first off, what is natural capital? I mean, I think the simplest definition of what is natural capital is it's essentially what nature gives you for free. So it's your remnant vegetation, it's your pasture land, it's your water, it's your soil. Interestingly enough, it's also your livestock, because while you might have to pay for your livestock, the livestock do an awful lot of things for you for free that you might otherwise have to pay for. So that, in its broadest sense, is what we view natural capital as. Now, why are we doing this work, Farming for the Future, to talk about natural capital and talk about the value of natural capital? It's because I guess there's been a feeling that if natural capital is free, then we can use it ad infinitum, and we're fast beginning to discover that there is a finite, there's a finite amount of this, so therefore we have to be careful as to the extent to which we make use of it, and to a certain extent we have to reinvest in it. So how do you say to a farmer, right, your farm is at a certain state of natural capital, you need to think about what the long-term implications for the profitability of your farm are, and what contribution your natural capital makes to that. That's what we're trying to get to the bottom of with this Farming for the Future work. We've just been able to do the first 130 farms. We're beginning to produce results for those farms. If you the booth's probably been taken down, but I hope some of you had a chance to visit the booth earlier on in the last couple of days to have a look at some of those farm reports. This is a process that we've just started, so getting to the point whereby we really understand the value of natural capital and how it contributes to a farm profitability is going to be quite a long journey, and we'll learn as we go.
Lachlan, natural capital is also a term that's coming up increasingly in the investment community. We recently saw a $20 million investment in a property in Northern Territory that was bought by Viridios Capital, that was looking at a carbon trader effectively. Increasingly we're hearing stories about properties being bought and planted fence to fence with trees for carbon offsets, and then there are a whole bunch of kind of large investors wandering around saying, we'd like to invest in your property on a quote-unquote natural capital basis. What are you seeing in terms of appetite for investment in a quote-unquote natural capital product, and are you worried that we are going to end up with this sort of dangerous thing that Richard Heath has talked about at the AFI, that we're going to end up not producing food or fibre because we're too busy producing offsets, for instance?
That last one is a challenge, and food for fuel is another one as well, especially when you look at it from a global perspective. But natural capital, I think, is a really good way of expressing what we would look for in any investment, looking at an investment for a long term, back to their sustainability. As a super fund, it's about the long term, so how can you demonstrate that if we're investing in agriculture, there's going to be a sustainable long-term return, and if you can show that through what's happening with natural capital. I think it's almost inherent in what most farming or agricultural businesses do. You understand your property, you understand the land, and what you need to do to reinvest to ensure that you're going to get a return in the long term. But if you can show that clearly in investment terms, so we can understand that in 5, 10, 15, 20 years, it's producing more, greater income coming in means when you discount that back, there's a higher capital value. So there's a fantastic place for it, and it makes it clearer for us to understand the benefits of those investments, particularly as we were talking about before with climate change and all these other impacts that will come in and change the way the business may work. If it's expressed clearly that you know how to manage that, gives us a lot more confidence.
You're not worried that natural capital is the new Bitcoin, and we're seeing a whole bunch of investors come in saying, oh, I just need to have natural capital in my portfolio. I'm going to overpay for properties in the hope that we can generate the carbon or generate the offsets or...
So I'm coming at it from the very simplistic point of view that the way you work out the value of an asset is to understand its future income, discount it back to now, and that gives you the capital value of that asset. So whatever that may be, if you can do that and clearly show that these future incomes are sustainable, then you actually have a real asset, and we understand that value, whatever it may be. So yep, Bitcoin, it's not an asset, that's just my personal view. So that by being able to demonstrate the income, that's the key.
Yep.
Can I just jump in there, Jackson? Because I think that's exactly right. And yes, we can overinvest in this, and I think you're alluding to the Kiwis that ended up, taking out a lot of farmland because their carbon price went through the roof. So trees were were better than growing sheep. Now, the critical point is, at what point do you overinvest in this natural capital? And that's the thing that we've got to kind of keep an eye on. We think there's a tipping point whereby up to a certain point you're benefiting your profitability, and then you can overinvest, in which case your profitability comes down. So I think Lachlan's completely right. It's a very important thing to keep an eye on what the value of it is.
Nick and Helen both, I also try and get two questions together. So how well are these practices around natural capital and sustainability communicated and adopted by producers? So maybe a short sense of the government frameworks that get in the hands of producers, and then from the perspective of what you're hearing from your community, Helen, or what you're worried about, are family farmers, for instance, kind of being bombarded by, players from outside, signing them up to projects that they probably don't know enough about, for instance?
Very quickly. From a sort of a legislative framework perspective, I guess one of the key things in the sort of pipeline at the moment is the nature repair market legislation, which is, I think, currently in the Senate. So that's, I know the NFF's been sort of very involved in sort of discussions with government as well about how to make sure that sort of works for farming communities too. So that, is about sort of creating a new and emerging market around biodiversity outcomes, and picking up on Lachlan's point around sort of bringing in diversifying income and providing sort of alternate sources of income. So I think to sort of tie a couple of questions together and a couple of themes coming through on Slido, Australian farming in the future, in my view, is still going to be around sort of that sort of core food and fibre production, but there's also going to be opportunities around sort of alternate income sources, around sort of carbon markets and biodiversity markets and natural capital outcomes too. So that's sort of an emerging space, but it's all not set up now. And again, sort of having those credentials and the data and the framework and the integrity of the system set up to make that work and work for farmers is going to be really important and a big focus at the moment.
Yeah, so I think just picking up on Nick's point, the Nature Repair Market Bill went through the Parliament, or went through the House of Representatives in June, and it is in the Senate now. And the concerns raised in debate were very largely centred on this is not great policy if we're moving one problem to somewhere else. If we're trying to offset biodiversity loss through one sector and shifting that to somewhere else is not a great equation. I think the other thing to say about it is that the Nature Repair Market Bill in isolation of the EPBC Act is problematic as well. And we need to get the intersection of these things right. I think there's many farmers I speak to who are not interested in locking up blocks of land in isolation. They're interested in nature repair that increases productivity. So those things, I think, can work together. I think, again, farming communities want to see preservation of biodiversity. Farming communities are incredibly invested in the ecology of their local environment. That's what farming communities have always been about, really, because that makes a sustainable community more broadly. It means that the amenity of our landscape is sustained, is enhanced. And we know that there have been farming practices from decades ago, or indeed a century ago, that have had negative impacts on our soil structure, on our water retention, and all elements, really, that ultimately led us to lower productivity. So I think these things go together in agriculture, and it's key that in anything we do in the nature repair market brings that intersection together. And again, we know that the integrity of these schemes is fundamental as well. We don't want to be locking up land and increasing weeds and feral animals, for example. I don't think agriculture in any way wants to be associated with shonky practices. Far from it. Really, the ethics of this are fundamental to the reputation of Australian agriculture. So it's critical that we get it right, and I'm watching that debate play out in the upper house. I think there's a lot more to learn and do on this.
Great. I'm going to try and put more questions together because I'm very afraid of getting between Glenn McGrath and his objective. But Alasdair, just from the perspective of the work that it takes to kind of go through the journey of, say, building up your natural capital, do you have to accept lower revenue or lower income as you go through that process, A? And if you do, then the question sort of comes to you, I suppose, Lachlan, in the sense that is the financial community prepared to accept lower returns for a little bit as we go through this journey, which may result in less revenue for a time, because we know there is an end game which is of higher value to Australia? So I'm going to get you to be controversial, and then you'll have a good answer on the back of that one.
You want me to go first?
Yeah.
Well, so I mean, look, I think the first thing to say is any change in management, brings risk, and brings risk that you're going to miss something and lose something and along the way. So there is a risk that there's a bit of a drop off as you change from doing things one way to doing things another way, and a lot of the farmers that you see that have been kind of investing in this way, they're doing it by trial and error. And that's really why what we're trying to do with this Farming for the Future project is kind of try and bring some real data so that farmers can make some really, really informed decisions around if they're going to start investing in natural capital, then this is what the long-term profit benefits for it are. Now, how do you minimise the risks as you change from doing one thing to do another thing? That's, I think, you learn from your peers, you learn from other farmers. I think these farmer support groups are terribly important in terms of trying to get people that have gone through a transition to share that information with other people.
Yep. So we can make the point, hypothesise that you are looking at a reduction in income while you're going through this process for a period of time.
Look, I'm not saying it's a given. I'm saying it's a risk.
It's a risk. Okay.
Yeah.
And so, from a financial perspective, Lachlan, so now you have a risk on a property, a risk of a lower income. You have a bank that's saying, my expected return is X. How does that flow through to the financing side? And how does, for instance, a super fund, which would fund a bank, say, through a bond issuance, for instance, play in that role?
No chance, not going to touch it.
Not.
No, seriously. A good business will understand you keep investing in your business to grow it, whatever that may be. Agricultural property, you'll look to all the risks that are coming, and you'll look at ways of adjusting your business going forward. So my view is any good business, whether it's agricultural or in any other industry, you look to the emerging risks, you start investing in capital that can help mitigate those risks and give you more income going forward. Even if you're just a small business owner, you've got your own income, you don't really want to go for a period of 5 years where on half your income, you still need to have your quality of life and all that sort of stuff. So you start to think about the future and invest for the future. If you look at it that way, there's a lot of very smart people, a lot of smart industries, advisors, everything can help make this happen. So from my side, we should look at the positives and the opportunities to actually grow more diversified sources of income, whatever that may be, and bigger and better businesses, which means it's a fantastic opportunity for us, as opposed to, well, you're going to go through this trough and then you have to have more questions and more risks coming in. It's really looking more at, well, how can we continually enhance and grow and get better?
Right. Well, that's great answer, and I think we'll hold you to that when the time comes. We'll come back to you and ask you some more questions about that. Unfortunately, we're out of time, so please thank our panellists, Lachlan, Baird, Helen, Haines, Nick Blong and Alasdair Macleod.